points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in November 19, 2021. And today I want to talk about the easiest option trick. I want to go over premium and pricing. I got a couple of keys and tips for you. We are going to go over them. You can see here, I hope this blows some of your minds, but we're still going to go over some of the basics here with the watch list. A lot happened in the market today. It was very good as far as bullishness for the tech stocks. The Dow ended up a little bit down, but the economic data and earnings was good. We didn't get any surprising news, but what we are coming into tomorrow, that is going to be very important. It is the mid-month expiration. We got a little spooked about it today. We'll talk about this little dip, but tomorrow might be packing a punch. So we got a lot to go over. I'm going to go over all of that. Then I'm going to go over all of the plays that we made. We made a bunch today. We got to take profits, and I got a couple of plays that I'm looking at for tomorrow. I got some weeklies and some that we are going to be swinging. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the play, see the plays, watch the watch list come to life, and yes, if you have some awkward workout songs on your playlist that you're kind of ashamed of, then yeah, we are the place to be. And the most important thing you need to do, post your watch below, let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, let's start with the option advice. So none of this is a recommendation. Option trading, again, lose on financial friends, lose on financial advisor, occasional purpose only, think about it the day. But in all seriousness, though, we've been doing a lot of trades, and we've been going over these trades. A lot of you may have seen this chart. We've been going over different types of premium, and I'm talking about the pricing, and I think this is a big thing that a lot of new option traders, even some of you who are advanced, I think you're missing out on this, and this is charting your options. So if you are on E-Trade, all you have to do is get your option trade. You see this link, put the link to whatever number you want. In this case, it is link 5, and then you click on any option, and it will bring up the chart. But this is what we're going to talk about here. I want to go over how to look at it visually, and even if you do not have the chart, there's still ways to monitor the option price, and this right here could be a world's difference, or at the very least, it'll help a lot with entries. I mean, you could still get clapped. You could even look at this and you'll be like, okay, it's a little expensive. You will still miss some of them. We've talked about that a lot today, but overall, I just think a little bit of awareness here will take you a long way. And if you've watched all of my trades, this is what I am using. This is what I am mainly looking at, and this is pretty much the big driver for a lot of plays. If the premium is good, obviously it depends what the underlying stock needs to do. A good premium and a good option contract, and making sure you're not getting overpriced for it, will make sure that you're able to capture a lot of the gains on a move. Now, that is how you are going to do it on E-Trade. You can also do this on TD Ameritrade. So if you see right here, I have a quick chart brought up, and I could have an option chain. So what you want to do, you either go to a quick chart here, you could throw one up to make it easier. That way, with this link right here, I could be on my portfolio and look at the option. You'll see, but then come to the link button, hit whatever color you want. In this case, we're going to do red, and then go to your option chain, and then link this with the color as well too. So now this is red. I had something there, so it took off the ticker, but we're going to go back to Roblox here, find any of these options. Where's the ones? We flipped out of these ones today. This one was crazy. But then you go all the way down to send to. You may not see it there because of the banner, but it should say send to whatever. So if I show it here, I think you could see it now. It'll say send to, and then you send it to the color, and then boom. Since this is linked, you actually don't need to link the option chain because then that'll happen. But now it'll go to the chart. So I have the quick chart up here. If I make this a little bit bigger, we could adjust the time frame, and you can see here's the 1 minute chart. And now this is going to be the basis of what we're looking at. You could always zoom in. Again, here's a bigger one on TD Ameritrade. I will be showing you guys on E-Trade, but now these are the tips that I want you to look at, or just some things you could to keep in mind while you are trading. So the first thing I would be looking at is the relative pricing data of that option. So what do I mean by relative is what is that option trading at relative to the day before, the week before, and the month before. Now, depending on the contract you have to really think about this, because you could go look at a weekly contract, but at the same time, if you go ahead and do that, it might show you different relative pricing, and most of the time it should be going down because, again, a weekly is going to have less premium. You are either going to be in the money or out of the money. So on these November 19th, let's say, again, to that play that we flipped here, if we look at the relative pricing today, it says that it's up. So right here, when it's showing you this green, again, monitoring this change close right there, dollar change close, or if you even look right here, plus 0.06, that means the contract has closed up 0.06 from yesterday, 6 cents, or 33%. So mind you, that is today. So that is compared to the day before. So this is 33%, 6 cents higher than yesterday. That's one metric of relative pricing. But like I'm saying, if we pull it out, this contract at one point was going for $1.20. I even sold out of it today at $1.20. But in this case, since this contract expires tomorrow and is far out of the money, it may be cheap relative to last week, but that is because it is going to expire. So you got to have a little bit of option understanding and keep this in mind when you're looking at different dates, but this is what you want to look at. That way now when you see all of the trades we've been going for, the ones with time, this one you could play a little bit differently now, and you could kind of now get an idea of what's going on. So you see we're at Roblox. I think it hit like 130, 140 today. Let's go to the 150s for January, and you see the chart right here now, and this is what I'm talking about. On just today alone, you could take a quick look here. It is up 88%, and that is $5.95 per contract. That's where it's closed, but at one point, these contracts were higher. So look at the relative pricing on the day. If you're getting it at $8 around here, it was definitely cheaper than where it was, but it was still gapped up from the morning. So when you're looking at this now, you could see, okay, there's a premium from there, but now pull it out for 1 week. Where's it at on the 7 days? Even if you got it at the low of today, that's the highest this contract has been. Again, contracts are going to be volatile, especially if they're out of the money. So you've seen it with a lot of plays. Why is this important? Because if you're buying it at the high end of the contract or you're not really looking at the premiums, this is how you could get clapped, because if you end up buying when it's high, you'll see if you hold it for longer than a day or two, you're probably going to fluctuate anywhere from 20 to 40% on some of these contracts. So this could make a big difference there. But like I'm saying, keep pulling it back, and you could even look at it now for the last month, go for the last 2 weeks, but then you could see what this contract has been doing, and then you could get an idea of really, okay, am I buying at the top end or not? And the best thing to do is to get a contract when there's not as much premium, because what could end up happening, the stock could keep going up, but the premiums will come down. Again, premiums go up, especially out of the money, as people are anticipating stuff. We've done this a lot. We call it frogging the contract, but you could get a contract for cheaper while the stock is going in a direction. So essentially, I think Roblox is going up. We have our big position in all of that. This thing can keep going up, and I could believe in it, but I don't need to buy the contract at the high. Essentially, if the current pace begins to slow down, you might start to get these same exact contracts and maybe even a better date or the same date for a cheaper price, and then you could still play the upside move if that's what you're looking for. And the idea is wait till the stock is going in your direction and making sure you're getting a better price. Now, it all depends on what you're doing. We talked about it today, and usually if you're going to be holding longer for a day, you really don't want to be buying at the top. It doesn't mean contracts could still keep going up, and that's the key to all of this, is that you might miss out opportunities if you're too strict about this, but again, being aware of premiums will take you a long way. So back to this page that kind of blocked you there. The main thing that I usually look at when I'm making my trades is I'm looking at the day before and then looking where it's been at for the last 2 weeks, because then that could give me an idea of, okay, 2 weeks have gone by. If I'm trading contracts with like 30 to 90 days of time, 2 weeks can affect it a lot. Is that premium up or low? And is the price dropping because of decay, or is it staying up because people still think that the stock is good? That is something that we've seen a lot of recently. If you look at a couple of plays, I think one that I made recently was net. And this one, I mean, you'll look at the options, and this is why it's important. We still made a flip on it, but you could see here on like a 2-week contract, at one point, the options did dip, and I think we got it here. But if you look at the last couple days, you're seeing that it's up on the 1 day, but then you kind of look back here, it has already moved 100% just recently, and now you're at the middle where the contract isn't cheap, but it's not expensive, and then again, it's already coming off a very big low. So there might be some better examples that we could look at, but the idea is the premiums could still drop in a 2-week time frame and then still be elevated. We've seen this a lot. I think Airbnb is another good example, but watch out for that. And then the next thing to look at, you've already seen me do it. I've kind of brainwashed you a little bit, but the one thing you want to look at with pricing easily is the change close. This right here will immediately let you know how much an option is up on the day. So whenever you see this little number right next to it, if it's positive or negative and it's showing you an amount, that's how much the contract is. So the change close and even the change close percentage, this is immediately letting you know, okay, if you bought at whatever price or factor in whatever price you get executed at, that's going to let you know if there is immediate premium or not. So if I'm trading something on the day and let's say the stock starts moving and surging, and we actually kind of did that here today on Apple. So this was one of the plays that we made, and you could see it here. We got the Apple card news and I grabbed 20 of these Apple 200 calls, but I paid 20 cents and I was cool with that, and you'll see why. Because even quickly, I could look at the change close. I was looking at the option chain and I said, okay, if I got filled at 19, 20 cents, how much higher would that have been from the day before? And it pretty much would have been about 1 or 2 pennies higher, not much. The change close at my order barely moved, and I knew at that moment I only paid a 8% premium, and then shortly after, we were able to sell out of that for about 100% gain. So that's one of the quick things you could always look at to gauge the premium. This change close, this is communicating a lot. That's why if you see the setup that we've added here to the portfolio, this is all I need to be monitoring the premium. If I know what the bid and the ask is, as well as what the last trade was going for, that's telling me about it. And then once you already know what it closed at the day before, you're getting an idea of where the premium stands. And that's why these metrics and looking at the premium could tell you a lot. So watch out for that. And then finally, the one thing to keep in mind is that not all contracts are going to have option data or extensive option data. So sometimes the contracts with the highest open interest, they have been around longer. So if a company's trading, it gets volatile, they'll often add contracts, especially as you get closer to expiration. So sometimes if you're not really getting a good price history on the option contract, go to the one with the highest open interest and you should see a more extensive price history on the chart. So coming back to Roblox here, you'll see what I'm talking about. If you go to these January 165 calls, you'll notice there's only 2 days of price history. Some of them, they're just really not that much of history. These are new options, but now come to the highest open interest here at 2,800. And what do you notice? This whole chart has just a whole history. You could see where it's at comparatively to a couple months ago, how it's traded and all of that good stuff. So hopefully this helps, but hopefully you guys are monitoring the premium. But now, as far as the keys, I mean, probably should have started with this in the beginning, but today was all about that good earnings and data. Again, we got the updates there on Powell. It's seeming like it's going to be a good done deal for him. Maybe unless it was Powell's decision not to do that, but a couple of senators, Wyden and I believe Manchin, they gave a positive comment, as well as another, it's like the employment treasurer or something, some other head division, but it raised Powell's odds today, and that was good. The only other thing that kind of spooked the market here, middle of the day or early in the morning, there's a tweet from CNN about Manchin's vote on the bill, and we're going to get some updates on that today, but that kind of killed the momentum, but we were able to shake it off as the big tech stocks went. But there was more good retail earnings, there was good manufacturing data and all of that. Everything was really good, but one thing people are talking about, and we already said, that option expiry tomorrow, it could pack a big punch. It's actually the second biggest amount of contracts from the beginning of the year, so there's a lot of money on the table that's about to expire, a lot of rolling over. So whatever happens tomorrow, people are going to be looking at that. But now, whatever happens after this week, we are going to be getting Thanksgiving. Things may slow down, but you could quickly start getting the seasonality and that little Santa Claus rally that may start to take over, as seasonality is really going to come into play here towards the end of the year. But coming into your first pretty picture here, this is what we're going to be looking at the whole week, really, or next week, and even for the rest of the year. But it has to do with oil. There was more updates on us releasing from the SPR, the reserves, and even China said they're going to do it. But a lot of people talked about this, even JP Morgan, I think, or Goldman Sachs, I'm not too sure, but they put out a report and they pretty much priced in about $5 to $8 a barrel based on these effects. And if you go and look at what happened, oil has already dropped that amount. So people are now saying that oil in the SPR release is already priced in, and then this is history. So we've done this a couple times in the past, and you could see anytime that's happened, the first time it led to a little volatility, but prices rose, dropped down, and then rocketed up. 2011 2011. It led to a price increase, and then things slowly edged up before the 2014-2015 oil crisis, and then we haven't done it since. So this puts us in an interesting spot. We'll see, but now for the rest of the week, even coming into next week, oil and energy is going to be key. I'm definitely going to be watching that, but now a lot of supply chain stuff and what's going on even with like Canada and some of the new regulations and holiday season and retail sales, that's going to be key, as well as now case numbers. The UK, they've been getting some COVID stuff, so this may come back. Otherwise, seasonality is probably going to take over. Earnings season is getting wrapped up, and we may start welcoming Santa, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off that bat, I got 3 different stocks that I'm looking at coming into tomorrow. I have plays on all of them, and we'll be able to cover some of the plays that I made, but I think depending on what we get tomorrow with the option expiry, there may be a good opportunity for YOLOs and some of the dailies, but we did get clapped on a lot of them this week, so we'll talk about that. But the first play I'm liking is coming in a set. It is Walmart and Kohl's, and I made plays on both of them. So I'm looking for the retail bounce. You could even factor Target into this, but Walmart, they kind of sold off a little bit, even though their earnings was good. Wall Street didn't like what they were doing with their margins, and then today, Kohl's, their numbers did good, but their margins increased. They were the one who got rewarded by Wall Street, but I'm expecting we may get a little bit of a rally, especially as supply chains and some of these updates from these companies, that they are going to be good and they're going to have some of this inventory. I think it could be good seasonally, so I am looking for a swing trade, but the Kohl's is a new one. That is the retail winner. We'll go over that play, and then Walmart, that is a average down from the earnings. So if you remember, we played the pre-earnings. That one didn't work. We sold out practically break even, and then I ended up holding another one of the trades, and that one after earnings, it dropped 63%, so I'm down 168 on that. I'm still holding those, so now I decided to get more time on the same strike, and they went up a little bit, but now this is my first average down since that play. I'm thinking if it comes back, this is really the move I'm looking for, pretty much what Amazon did. Again, Amazon falls kind of into that retail category. They sold off on earnings. They sold off very quickly. They hit kind of a support level and they started bouncing. If we get that bounce in these and retail starts to go up with it, I think it's going to be really, really fire there. So I'm hoping to get that swing, and now we got both plays in there. So we're going to be watching out for that one. That was the first one. And then Kohl's, we grabbed this one here in the morning, and this was just off of their earnings. They did good. I've been following the Walmart situation, and to see that Kohl's did good as well as raise their margin, and they pretty much gave Wall Street what they were looking for. I thought they were going to be a winner. They're a slow mover. They held. I bought 5 of these January 70 calls at 160, and pretty much throughout most of the day, we're up 30%. I could have took the profits, but I decided to hold this, and that's because Kohl's is at a very good level, and I think if Walmart gets some steam, I really like where it's at, but this is going to be leading to the one-year highs. They did top out before there, but you really start to pull this chart out. This high could mean a lot for them. I mean, in terms of setting or changing the trend for them. So I really like it. It seems like a good 50-50 value play. If they have enough momentum to break above here and they got Wall Street support coming into this, it'll be good. Otherwise, they'll be sent to the lower bounds of the value abyss. But that's why I decided to swing it. We're going to be holding that one into tomorrow. But I like both of those plays. Those are going to be the first ones. And then the second play, NVDA, I did a continuation play and I'm writing it out, but I did flip one in the morning. So I did the morning's continuation. The fact they held up was great. There was a little bit of sell-off, and just like I was saying, it looked just like Lucid, where a lot of the contracts were only up like 50, 60%, which was still a good amount, but they were nowhere near what they were going for a couple weeks ago. So if there is a continuation, I think the contracts could still have juice, but there is still a little bit of risk there, considering that if it does sell off, it will be bad. But what I'm looking for and why I was willing to hold a play overnight, I'll go over that one, but it's either going to play out like AMD, where AMD did the same thing. They had a pre-earnings run-up, sold off into earnings. Earnings day, they kind of did a little bit good. The contract premiums didn't go up much, but then next 2-3 days, it was just a slow grind up. So if that happens, we get more updates, more guidance. And again, what the CEO said, he was starting to sound like Qualcomm, and they're really giving good guidance. I think we might get a continuation. So as far as the play, you could see what I did right here off the morning. Within 3 minutes, I grabbed 4 of the January 387 calls for 640. It was a slight premium to where they were at, but it was a good price. I mean, we got in pretty early, and I got in off of the dip that first 3 minutes. if you look at NVIDIA, especially on day of earnings, I mean, that first 3 minutes could have a big effect because it started to drop. It went from 323 to 318. So we got a decent price, but the contracts wouldn't go any lower than there. I grabbed 4 of these contracts for $640, so it was about like $2,000, almost $3,000. We held it for about 2.5 hours there. I mean, at one point right away, I was up 30%. I could have got more money, but then it really was not starting to hit. So I said, okay, I'll take the 20%. We sold out at $740, $1 a contract, $400 realized profit. But then I waited throughout the day. Again, this whole option lesson, I looked at the premium, and you'll see what I'm talking about here. I decided to go for the double dip towards the close. All of the other big tech was ripping, and I'm just, again, expecting this to play out like AMD. I think you're just going to get a lot of momentum even towards the next few weeks here. I think this is going to be only one of the stocks to focus on as long as things stay good or stay in melt-up mode. But I grabbed 2 of the January 345, so same time frame, less contracts, but I spent more money per contract, and I pretty much just got a higher quality strike price for more money, but the premiums were down at that point on the day. I also did make a next week call on NVIDIA to play the continuation, and these, I think they only dropped like 30%, or they may have came back up. Yeah, they held down there, but the weeklies held up very good for most of the day, and that's going to be something to keep your eye on. Again, I'm going to be looking for a lot of NVIDIA continuations, but now coming to the option chain, you'll see what I'm looking at here. Let's get that NVIDIA up. So here it is, and clearly, look at the change close. It was already up 89%. You could even see on the chart, how does this contract compare? It was selling off before, and it's pretty much now not at the highest that it's been at. Again, this was, I think, was in the money at one point. Or no, I'm thinking 250, I think. That's crazy. But it also wasn't at the cheapest point, so there is some risk, and I think it's warranted at this level. That's why I'm saying you're in the middle. There is still some risk. This could still come down here, but that's going to depend on the underlying. But you could see that price that I got in at 1380. This was literally the bottom here, and because now relative to the day, I made that flip. Again, we got in on a little bit of this. I probably sold out around this time. Again, I was on a different contract, but most of the prices reflect. But you can see here, 1380 was actually the lowest this contract traded all day. So that means it came down even lower than where it was at after the opening. So if I wanted to play this on opening like I would have been paying $15, $16. So it's closer to the money. It's going to play out a little different, but that's why I got it. I'm looking for the continuation. I'm really liking that play. And then finally, Airbnb, I'm going to look for weeklies tomorrow, okay? Weeklies or some with a little bit of time, but some of the weeklies have decayed a lot. And now some of the Decembers, depending on the further out of the monies, they're vulnerable to sell-off. So there's still a little juice. Don't get fooled on there. But if it does have one of those bigger sell-offs in the morning or any sort of like those, you've seen the Airbnb sell-offs. It's kind of hard to explain, but it's vulnerable on there. The premiums really get clapped. So I may look for a flip on that tomorrow, or maybe even a swing if the prices get good, if we get a good set of red candles. But overall, I got to be careful. The weeklies did clap this week. So those are the main plays, and coming in everything else. I mean, speaking of the weeklies, I'll go over the plays, but we got clapped on those babas. Remember, I sold out for a loss yesterday, got to take a way smaller loss than would have held. But again, I had those weeklies. That's $275 down the drain. We made that Tesla at the beginning of the week. We lost that $500 almost instantly. So those are some bigger trades, and that's what happens here with the shorter terms. We've had a lot better luck, even if anything did go down on us. Those MasterCards from yesterday, those got clapped. Still liking that play, but this one with enough time, you could see it's not as immediate. These are going to be booked realized losses. So be careful on the weeklies. I'm still going to keep my eye out for opportunities. We still were able to make flips, and that's where now coming into the rest of the plays, we made that NVIDIA this morning, and then those Roblox. I had 5 of these 150 calls, and if you guys remember, we bought this during one of the run-ups that I forgot when. This was on the November 9th. Remember, we got these, we flipped out half, and we made them free, and I held them all the way through as I was doing the covered calls, but those contracts went down like 80%. They were worth literally 20 cents. Even today, at the end of the day, they were, but I ended up selling those out today at $1.21. Roblo was crazy in the morning. I took the profits, got like $500. This is all pure profit and free, so that one was a nice trade. That was a good one to get out of, and then I added the Coles, and then we did the NVIDIA. Those were the weeklies, still holding those, flipped out the other ones, and then Apple. This was a good play, and I did 2 different ones. Remember, we had a November play as well. I had a 155. This one expires tomorrow. That was a free earnings play. I sold out at 275. That's all pure profit. It was in the money and expires tomorrow. I didn't want to risk it, but we got this Apple play on the news. I showed you there during the lesson, but that one was really nice. Essentially, we just got the Apple news before everybody else. You could even see here, look at the time that we executed on this trade. I mean, 9:26. That's literally the first candle on here. So we were able to just steal those contracts. They went up about like 80%, or I think think 50%, 20 to 27 there, so just under. So I sold out. They got like 140, 150 profit, and then this other 270. Content with the small gains, but that one's going to be fire to watch. And then I grabbed Walmart 155s, and then I grabbed the NVIDIAs, and then holding those into tomorrow. But as far as everything else, a lot of different plays I'm going to be watching. Watch the Macy's for the post earnings. Roblo as well tomorrow. That could go nuts. I'm even looking to roll over the covered calls. There is a great covered call opportunity. You know, I'm not going to censor myself on this. I really think Roblox could be the next GameStop here. Again, what the premiums are offering, the volume, the potential for what this is shorted, everything going on. I mean, this thing is a beast, and the market cap is still under $100 billion and cheaper than a lot of things. So I think they got a lot going with it, but I like it. But that's why I'm going to say I'm going to look to those covered calls and the premiums. We are not out of this one just yet. We're riding it, but I think that one's going to be very active. So keep watching them, especially for a Friday play. AMET, they had earnings, so watch the post-earnings continuation. Same thing with Intuit, and they've been a leader. This one is going to probably be a good earnings continuation. Watch how that plays out. Ross, they ended up going down here after earnings, but I think they did good for the retailers. Most of them did good, so watch them. Uber, they closed very good. We've liked the contracts this week. If they could start to get steam, these might start to run, and they could be very, very good, so watch out for them. And then Airbnb, like we said, Palo Alto Networks, they had good earnings. They're kind of going up. The premiums are crazy, but this one might be a wild one on Friday. Watch for that post-earnings continuation. Robinhood had a little pop. Positive news about the Citadel case getting thrown out, and then MasterCard. I'm surprised they got clapped today. It was a big amount, but I will wait for an average, but I still do like this play for the most part. I think they're a leader in the space of all of this, but there might be a little bit of volatility ahead. We will see. We talked about that one being risky, and then there's also LGVN. We have 200 shares of this. They got an FDA approval, and they were selling off before, so they're breaking all these levels. This one could still be a high play. We got 200 shares, so we're still holding those. And finally, TLT in the dollar. Until TLT hits one of these ranges, I think the market is going to be chill. Everyone's talking about this now because the most fascinating thing about all of this is that the market, the bonds haven't been affecting the market, and it's because we haven't broke out of the range. People are looking for either a new low, and that could say a lot about the market and Fed policy, or a new high, and that could too. But it seems like the bond market is not ready to move until they really get an idea of, okay, where is the Fed going to mess up? So the dollar is still going to be key to watch. That is going to still go up, or it could have a lot of strength. But the question about the dollar is, if it goes up, what does it start to hurt? Either oil, commodities, Bitcoin, all of that. That's the key, but the real snitch will be TLT. Once the bonds move, if they set a new high or a new low, that will say a lot about how the market feels, and then about where we're going for 2022, baby. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, baby, no fear. But the code loves you. I love you, and we'll see you in the morning. Let's go.